Welcome to the Nifty Noon podcast.
Great to be here.
This is The Deep Dive, where we take a stack of our Nifty Noon daily crypto updates and really pull out the most important nuggets of knowledge and insight specifically for you.
Yeah, we sift through it all so you don't have to.
Exactly. Our mission today is to cut through the noise of what was, well, a truly whirlwind week in crypto. We're looking at July 7th to July 11th, 2025. We're going to unpack major market movements, some evolving regulations, interesting product launches, and honestly, some pretty wild stories.
It was definitely a wild ride.
So buckle up, because we're diving deep into what really mattered over the past 5 days.
It really was an absolutely relentless week. Full of these seismic shifts that could genuinely reshape how we think about digital assets.
For sure.
From, ancient Bitcoin wallets waking up to hitting a brand new all-time high. The pace was just incredible. And our newsletter really tried to capture the essence of each day's biggest stories as they happened.
Okay, let's unpack this then. Starting with July 7th, a day our newsletter aptly titled, "The $8 billion Bitcoin Ghost Awakens."
Great headline.
And truly, what a headline. We saw this, monumental event. 8 Satoshi-era Bitcoin wallets, totally dormant for over 14 years.
14 years.
Suddenly moved a staggering 80,000 BTC. At the time, that valued over $8 billion.
Yeah, just incredible.
Can you even imagine the discipline? These wallets hadn't been touched since 2011. Bitcoin was trading then for as low as, 78 cents?
Something like that, yeah. Pennies, basically. That's
Yeah.
not just patience. It's almost legendary conviction, isn't it?
It really is.
The sheer scale and the history here are just remarkable. These were original Bitcoin addresses, linked to the very early days when Satoshi Nakamoto was still around, still active.
Right.
And the funds were transferred to modern SegWit addresses, which are basically upgraded Bitcoin addresses designed for better efficiency, lower transaction fees.
Right.
But the real intrigue and, what keeps analysts up at night comes from the two main theories kind of swirling around this move.
And that's where it gets fascinating. Scenario 1, and probably the most optimistic one.
The nice one.
Yeah, the nice one. Suggests this is simply an original Bitcoin believer, a true OG, just, upgrading their operational security, making sure their treasure is safe in a more efficient format. It's almost a romantic notion, right?
Yeah, it is. It really is. But then there's scenario 2, which is far more concerning, the potential for the largest crypto theft in history.
Wow.
And this speculation is fueled by this small test transaction made on the Bitcoin Cash network.
Yeah, I saw that.
From a corresponding address just before the massive Bitcoin transfer. That's kind of a classic sign an attacker might be confirming access, to the private keys.
Right, testing the waters.
Exactly. While it could be a highly cautious OG, it's also textbook attacker behavior. What this event really highlights for us is the persistent challenge of securing long-dormant digital wealth. And it forces us to ask, what does it really mean to own something when the keys could be anywhere for 14 years and then suddenly reappear? It's kind of unsettling.
And what makes it even wilder is the timing. This happened just as Bitcoin recorded its highest weekly close in history.
Yeah. The context is key.
And our sources also showed significant ETF flows around then, around 7.1K BTC and 86.1K ETH bought just last week, clearly signaling growing institutional interest, right?
Absolutely. And if we connect this to the bigger picture, this massive move occurred right before what people started calling Crypto Week in Congress, starting the week of July 14th.
Right. Big legislative push.
Yeah, we're seeing discussions slated for crucial legislation like the Clarity Act, the Anti-CBDC Surveillance State Act, and the Genius Act. Plus, the SEC Crypto Task Force was meeting with SIFMA about digital asset issuance and tokenized securities.
Lots going on behind the scenes.
Exactly. All this legislative activity happening against a backdrop of these major market events. Oh, and BONK flipping Trump to become Solana's top meme coin by market cap also happened around then.
Yeah. Can't forget the meme coins.
It just goes to show how many layers there are to this whole ecosystem. It's never just one thing.
It's never just one thing driving the market.
Yeah.
Okay, moving on to July 8th. Our newsletter titled, that day, Polymarket's Whale of a Resolution Problem.
Oh, boy. Yeah.
This one really highlights the fundamental challenges of decentralized systems when, human nature gets involved. Reminds us that even the best intentions can be tested.
For sure.
Polymarket, a prediction market, faced these accusations of coordinated manipulation by influential bettors. It sounds like something straight from a movie, wouldn't you agree? The stakes were huge.
It definitely felt that way. I mean, the most public and contentious example was that market on whether Ukrainian President Volodymyr Zelensky would wear a suit.
Right, the suit market.
This single market generated nearly $79 million in volume. Crazy.
79 million on a suit prediction.
Yeah. And despite clear media reports, fashion commentators, everyone identifying his attire as a suit, the outcome was repeatedly disputed.
So this raises a really important question about how truth actually gets determined in these decentralized systems, especially when there's significant money on the line, right?
Exactly. And the allegations were pretty serious. People talking about private Discord coordination, multi-account voting, just to push a specific outcome.
So UMA protocol, that's Polymarket's Oracle, is key here. Can you walk us through how their system, which is designed for consensus, could actually lead to these seemingly false outcomes?
Yeah, it's a tricky one. Critics argue that UMA's financial penalty system for the minority voters,
Okay.
where, those who vote against the eventual majority can lose their stake tokens.
Right.
Well, it basically incentivizes token holders to align with what they think the majority will vote for rather than with objective truth.
Ah, so it's game theory kicking in.
Precisely. This system, designed to achieve consensus, can actually lead to objectively false outcomes if a powerful enough group decides to game it. Like, for instance, there was that past market about a U.S.-Ukraine mineral deal.
I remember hearing about that.
It resolved to yes, even though no such deal was actually signed.
Wow.
So what Polymarket exposed is this fundamental tension. How do you design decentralized systems to handle very human incentives and, the pursuit of self-interest, especially when millions are at stake?
That's a huge design challenge.
It is. It's a challenge for the entire Web3 space, not just prediction markets.
So what does this all mean for you, our listener? This whole saga really raises important questions about the reliability of decentralized justice as these prediction markets get more popular and move into the mainstream.
Yeah, can we truly trust the outcomes if the system can potentially be gamed by a coordinated few?
It's definitely something to think about as these platforms continue to grow and become more influential.
And while that whole Polymarket saga was unfolding, kind of reminding us of the human element,
Right.
other significant shifts were quietly happening on July 8th. For instance, BitDigital made a pretty bold move, converting its Bitcoin holdings into Ethereum and raising an additional $172 million specifically for more ETH purchases.
Doubling down on ETH.
Seems like it. We also got news that the Trump administration's report on Bitcoin and crypto policy is due around July 22nd.
Oh, okay. That'll be one to watch.
Definitely. And Elon Musk even stated that the America Party would embrace Bitcoin. So, lots of political currents, too.
And speaking of influential figures, Ripple CEO Brad Garlinghouse was invited to testify before the Senate Banking Committee.
Right, on crypto market structure legislation.
So, yeah, a truly busy day for both market mechanics and the evolving regulatory landscapes.
Never a dull moment.
Let's turn the page to July 9th. Our newsletter highlighted Phantom's perp power play. This is all about innovation and integration within the crypto space.
Yeah, this was cool.
Phantom Wallet, which is, a leading digital asset wallet, especially on Solana,
Huge on Solana.
announced a significant integration of perpetual futures trading, basically leverage bets on future prices directly within its interface. And it's powered by Hyperliquid.
Yeah, this is a huge step for user accessibility and capital efficiency. It streamlines access to over 100 crypto markets. We're talking major assets and meme tokens.
Yeah, always the meme tokens.
Always. All with up to 40x leverage. Imagine doing all of that right from a mobile-first design in your wallet. Super smooth.
And the system even auto-converts SOL to USDC for trading.
Exactly. It makes it incredibly easy for users who want to just jump right into trading without a bunch of extra steps.
But what really stood out to us when we dug into this was how Phantom's move here could actually maybe flip a previous trend on its head.
What do you mean?
Well, our sources noted this previous trend of crypto influencers kind of shifting their focus towards Hyperliquid and Hyper-EVM, maybe moving a bit away from the broader Solana ecosystem.
Okay, yeah, I heard some chatter about that.
But with Phantom, which is the leading Solana wallet, integrating Hyperliquid directly, this could actually accelerate a shift back towards Hyperliquid, right?
Yeah.
Because users find it so easy to access from their familiar Solana interface.
Ah, interesting point. The power of native integration.
Exactly. It's a fascinating dynamic. Speaks volumes about user experience and how integrations within an ecosystem can really matter.
And these kinds of product integrations, they also offer a clear signal of broader industry support and the desire for regulatory clarity, like the Clarity Act.
Yeah.
It gained support from over 65 crypto founders. These founders represent more than 6,100 jobs across 21 states.
Wow, that's significant backing.
It signals a strong, unified desire from the industry for, clear rules of the road.
Absolutely. And July 9th brought even more intriguing highlights. There was a new filing for the Truth Social Crypto Blue Chip ETF.
Oh, yeah. What's in that?
It'll hold a basket of Bitcoin, Ethereum, Solana, XRP, and Kronos.
Interesting mix.
Definitely one to watch for those tracking institutional adoption. We also learned that Japanese MicroStrategy MetaPlanet plans to use Bitcoin as collateral leverage.
Like MicroStrategy, but Japanese.
Pretty much, to acquire cash flow businesses. And they just acquired an additional 2,205 BTC, bringing their total holdings to a whopping 15,555 BTC.
They're not messing around.
Not at all. Plus, OpenSea acquired Rally, and Robinhood CEO Vlad Tenev called tokenization the biggest innovation in a decade.
High praise. Things are definitely heating up across the board.
Totally. Now, for July 10th, our newsletter asked, is it time to PMP?
Referring to pump.fun, of course.
Exactly. The viral Solana-based memecoin launchpad. They officially confirmed their highly anticipated PUMP token sale set for July 12th.
Yeah, the sale is massive. They're aiming to raise $600 million.
$600 million.
By offering 150 billion tokens, which is 15% of the total supply, at 0.004 each.
Which implies a, what, $4 billion valuation?
A staggering $4 billion valuation, yeah. The sale is slated for major exchanges like Bybit, Kraken, Gate.io. Though it's important to note for regulatory compliance, users from the US, UK, and EU are barred.
Right. Gotta be careful there.
And they also announced an airdrop is coming soon, whatever that means.
But this launch comes with its share of controversy, doesn't it?
Oh, yeah. Definitely some raised eyebrows.
Our sources point to bad optics, given Pump Fund apparently made $715 million in revenue since January.
$715 million.
I know. Despite that huge number, their daily volumes have recently plummeted, like by as much as 80% from their peak.
Yeah.
And new competitors like BONK are actually outpacing them in daily revenue now.
So the question is, why do they need such a large token sale right now, given their past success?
Exactly. It feels a bit off.
Well, this situation isn't just about one token sale. It's kind of a microcosm of the whole meme coin market life cycle, isn't it?
How so?
It highlights the challenge for even really successful projects to sustain engagement and revenue, and the constant hunt for new liquidity, even when the optics might be questioned. It also shows the inherent risk and reward dynamics of these viral launches.
Makes sense.
But despite the criticism, the team has laid out this, well, bold vision to kill Facebook, TikTok, and Twitch on Solana with the funds. And look, a token launch of this scale could inject significant excitement and liquidity directly into the Solana ecosystem, regardless of the controversy.
True. And this news arrived as Bitcoin was already pushing higher, hitting a new all-time high above $112,000.
Yeah, setting the stage perfectly.
Setting the stage for what would be the biggest news of the week on July 11th. But before we get there, other relevant developments from July 10th included a Fidelity report valuing Ethereum as a store of value for an emerging economy.
Interesting perspective from Fidelity.
Yeah. We also saw the real-world asset market, RWAs, break an all-time high, surpassing $25 billion.
RWA momentum continues.
And BTCS Inc., raising $225 million to accelerate its Ethereum accumulation strategy. So the momentum was clearly building across the board.
Definitely felt like something big was brewing.
And that brings us to July 11th, which our newsletter celebrated with the headline, Happy Bitcoin All-Time High to Those That Celebrate.
Love it.
Because Bitcoin absolutely smashed its previous all-time high, soared past $118,000, officially entering price discovery.
Yeah, that thrilling moment.
For those watching the charts, it's that moment when you're in uncharted territory, right?
Yeah.
No resistance above, just up.
It was truly a historic moment, and this rally isn't just arbitrary. It's fueled by several key catalysts all converging at the same time.
Like what?
We're seeing strong institutional demand, obviously, significant inflows into the spot Bitcoin ETFs continuing, growing corporate adoption.
Metaplanet being a prime example.
Exactly. And an increasingly favorable U.S. regulatory climate, or at least the perception of one, all attracting more serious capital to the asset.
And the broader market reacted well, too.
Oh, yeah. The broader crypto market, including Ethereum and major altcoins, also saw solid gains. Reflected overall market confidence, a clear bullish sentiment.
And the on-chain data seems to support this bullish momentum, too. What are we seeing there that tells us this isn't just, a fleeting moment?
Yeah, the on-chain data is telling a very compelling story. We're seeing a bullish crossover on the stablecoin supply ratio, the SSR.
Okay, break that down.
Think of SSR as an indicator that signals new capital entering the market. It basically shows that the purchasing power of stablecoins is increasing relative to Bitcoin's supply.
Got it.
When that crosses over in a bullish way, it's a strong signal of fresh demand coming in.
Interesting.
And at the same time, it looks like retail selling pressure is subsiding while the large-scale players, the whales, are clearly in control.
How do we know that?
Well, one indicator is Binance's surging spot market share, which is now over 49%. That suggests big players are active there. These are all indicators that suggest significant long-term conviction, not just short-term speculation.
So with all these factors aligned, what are analysts predicting for the road ahead? Is this the start of something bigger?
Well, no outcome is ever certain in these markets, obviously. But some analysts believe these combined factors could potentially propel Bitcoin towards the $140,000 level later this year.
Wow, 140K.
It's a very strong foundation for continued growth, potentially. An exciting prospect for the rest of the year anyway.
Absolutely. And beyond the Bitcoin AT, July 11th brought a flurry of other significant news bites. Just shows the breadth of innovation happening right now.
Yeah, it wasn't just Bitcoin.
Coinbase partnered with Perplexity.ai for real-time crypto data. Pump.fun acquired Colskin, maybe, to bolster their analytics after that volume drop.
Could be. Smart move, perhaps.
And Telegram NFT gifts on TON absolutely soared with Snoop Dogg's drop. Sold nearly 1 million NFTs for $12 million.
Snoop knows how to make an entrance. That's huge for TON and NFTs on Telegram.
Talk about mainstream adoption.
We also saw ETH ETFs nearly flipping BTC ETFs in net inflows on Wednesday.
Really? That's a big deal.
Yeah, a powerful sign of growing Ethereum adoption and maybe, a rotating interest from institutions, perhaps.
Could be.
And in a subtle but significant nod to Bitcoin's increasing value, the Bloomberg terminal even switched its scale to show Bitcoin in millions.
Oh, I saw that. It's like 0.118 Matt now or something.
Yeah, currently 0.112 M for one Bitcoin when that news hit, I think. A small change, but symbolic.
Definitely. And in some genuinely good news for the industry, the U.S. Treasury officially withdrew its crypto broker reporting requirements.
That's huge. That simplifies things for a lot of players in the space. Less regulatory burden, for now.
For now. It truly was a week where every single day brought some new development that pushed the crypto market forward in some way.
Absolutely relentless pace.
So, as we wrap up this deep dive, it's just abundantly clear this past week highlighted the incredibly dynamic nature of the crypto space.
An understatement of the year.
From silent whales awakening to market controversies, new product integrations, and finally, that monumental Bitcoin all-time high. It's just constant evolution. These daily updates, like the ones you find in our newsletter, they really provide a unique vantage point to understand these rapid shifts and how intertwined technology, finance, and regulation are in this ecosystem.
Each piece of news, whether it's a multi-billion-dollar whale move or, a new ETF filing, it contributes to the overall narrative and the future direction of crypto. It's not just a collection of random facts. It's a story unfolding right before our eyes.
Yeah.
A story of innovation meeting human behavior and evolving regulation.
So for you, our listener, here's a thought to maybe mull over as we close out this deep dive. Given this week's rapid shifts and the, complex interplay of technology, finance, and regulation we just discussed,
Yeah.
what do you think these trends mean for the long-term stability and widespread adoption of the crypto market? Where is this all heading?
That's the billion, maybe trillion-dollar question, isn't it?
It really is. Definitely something worth pondering as we move forward.
Absolutely.
Okay, well, thank you for joining us on this deep dive.
Thanks for having me.
To stay as well-informed as we try to be with these daily, concise, and insightful crypto updates, make sure you subscribe to the Nifty Noon X profile and, most importantly, our Substack newsletter.
Yeah, check it out.
We'll be back soon with another deep dive.